Hey, what's going on, guys? Today I want to shoot a video talking about how to sell vertical spreads on the Webull platform. So I've made some videos, on this topic in the past before. So I just kind of want to do an updated video, talk about my kind of point of view and how I view them. So we're going to just talk about specifically put credit spreads, and we're going to do how to sell call credit spreads. So the simplest way to understand this, in my opinion, the first thing is you have to understand what a cash secured put is, right? So what that normally is if a stock is $5.69 per share, stock XYZ, right? So if you want to selling a cash secured put for say 500, so you're going to be -1, you're going to sell a $5 CSP, and someone's going to pay you, say, 5 cents. You'll get paid $5. So your risk is the amount of collateral you have to put up. So in this case is $500 minus the credit of $5. So max risk is $495. If stock XYZ goes to 0, aka bankrupt, whatever, right? So that's your max risk. So the first step to understanding what a put credit spread is you have to understand what a cash secured put is, because a cash secured put is one part of a put credit spread. So the second part is, and why people like put credit spreads so much, is normally, you look at a stock, for example, look at S&P 500, right? It's a very expensive ETF. It's $409 per share. So if you wanted to sell a cash secured put at, just say, the 409 level on ticker symbol SPY, that's going to cost you in collateral $40,000, almost $41,000 for one trade. So, granted, if you have a bigger overall portfolio, then $40,000 might not be that high of an allocation. But for a lot of people, smaller traders, $40,000 is more than they have in their account. So the advantage of selling vertical spreads, put credit spreads, is that you can buy insurance, or you can buy a put below it to kind of offset the amount of capital that you would need for the trade. And for this example, let's say we're going to sell the 409 put, but we're also going to buy the 400 put. So the difference between those strikes is $900, or $9, right? 9 times the hundreds. So just right off the top, our max risk is 900. If the spread plays out exactly. Now, I've mentioned in other videos, if the stock ends up in here somewhere, like come expiration, and it's like at 412, but after hours it tanks, and then your short position is now in the money, right? So that's going to get exercised. If anything below 409 is in the money, so if it's at 408.96, right? 408.96 gets exercised. 409.10 does not. It's out of the money. But I mean, sometimes it could fluctuate and sometimes you might get exercise. So if it's that close, I'm not risking it. And that's why I always recommend, close or roll put spreads before expire, whatever. Because of this risk, right? If it ends right in here, then you are not in a good position because you're going to be short. You're going to have to spit out. Your broker's going to have to cover you $40,000, and then come the next day, they're going to be like, "All right, we need our money back," and you're going to be like, "I don't have $40,000." So that is the risk. You understand. Originally on the platform, it's going to say your max risk is. So let's just do that. So sorry if I'm over analyzing this, but let's say, right? So we sold this, and this was currently. I'm going to show an example on the Webull platform here in a second. And this was $2.99. Actually, let's say it's $1.99. I don't know. Something like that, right? So the difference between those two are what? Is it 400? 400. Seems like that would be a lot, but it's really out the money. But let's just say 300. So $3.99 minus $1.99. So you're going to get a credit because you sold, because you have a -1. You sold this short position and you bought this long position. Debit. So $3.99 minus $1.99. So we have a $200 credit. $200 credit. So the distance between these strikes, like I mentioned, is 9. So our max risk is it's really the distance between strikes, which is 9. And then risk minus the credit. So distance minus the credit. In this instance, there we go. Right. So our max risk is going to be $700 theoretically. Max risk, distance minus credit, or 900 minus 200, 700. So that's our max risk, $700 for this position. So, we're risking $700 and we're collecting a $200. So not too bad with the risk to reward ratio. These are obviously made up numbers. I'm going to show you in the app here in a second. But yeah, so theoretically, this should be our max risk, right? $700. And I got that because I calculated the distance between the strikes. So you have a 409 put by 400. So it's $9 times it by 100, 900. And then our credit was we received a credit of $3.99 and we bought insurance. So normally, like I talked about, if you just sold a cash secured put, you're selling options, you'd get a credit. But once again, you have to put up $40,000 of collateral. So the value in a spread is you can take on this position, have a much smaller account size, but you're still kind of, taking on a similar position as a cash secured put. So hope you got all that. Hope that makes sense. And then, like I talked about, always close. I always close them and roll them out before expiration. If it's close, I'm just not taking that risk. Sometimes if I don't want to close it, I'll at least buy back my short position for like a penny or a couple pennies. Because that's the dangerous one, right? Because, yeah. This isn't this is just insurance. So, but I always tell people close it or roll it before expiration. But needless to say, that's a quick little rundown, right? Okay. So let's jump into the platform. This is Webull's platform. Let's go, like, I don't know. I normally like to do weeklies. So like on Monday morning, I'll look at the market, look at the charts. And that's something you're going to have to do. You're going to have to analyze the charts, right? So like you're going to have to come in here and determine whenever you want to sell, particular levels. You want to look at, there's all kinds of different strategies with analyzing charts and seeing levels and liquidity levels and stuff like that. I'm not going to jump into that in this video. But what I typically do if I'm selling weeklies, I'll come in, I'll look at a day, I'll zoom out, I'll be like, okay, we're in a downtrend since, that's 2021, but yeah, so I would come in and analyze like, okay, like I don't think it's going to go below 350. But whatever, however you determine your strikes, that's a whole nother video. This is just how you actually execute the trade. So this is after you've already picked, what strikes you want to sell them at. So this is the Webull desktop app. You have to have an account with Webull, obviously, to use their platform. But SPY is currently at 409, right? This is the delta column. So this is theoretically based upon the current strikes, current implied volatilities, current gammas, all that different stuff. How much time is left in the contract. Theoretically, I like to look at delta as this. If it's a negative 10 delta, that means you have a 90% probability that this strike will expire out of the money. As you get closer, you can see that delta increases. This column increases because your chances of being out of the money are less likely, right? So you're taking on more risk because you're closer to the money. It's 409, 409, right? So just for this example, let's just go on a little bit out of the money here. So let's say you wanted to buy, So let's say you wanted to buy, let's see. I don't know. Let's say you wanted to sell the 400s. But first thing before that, you got to come up here and select the option, select vertical. And then you can determine how wide you want to make it. Let's just make it a 5 wide spread. So $500. And so we want to be, what's our delta? A 6 delta. So we could do this one. So the 400 by the 395. Click sell. This is a test account. I don't think I even have enough money in it to do this trade. But you can see here what I just talked about. So this is 10. So that would be $5,000. So this is 1. So we're getting a $63 credit. We're selling the 400 and we're buying the 395. Remember, if you wanted just to sell a cash secured put, great, but you would have to put up $40,000. The cool thing about this is you only have to put up, 500-ish. In order to have a margin count, you're going to have at least $2,000, I believe. Check with your broker, but yeah. So this is an example. We're selling the 400, buying the 395. We're getting a $63 credit. So $500 minus 63 is our max risk is 437, and then we're actually receiving a 63 divided by 437. That is our return on risk. It's a 14% play here for a couple weeks, 2 weeks out, 14%. So that's that. And that's pretty much it. So you would sell it, it would enter it. However, determining if you get filled or not. The bid ask on this looks like it's dropped a little bit since I've started talking about it, but the bid is at 58. So it's a pretty tight bid ask spread. So that's really good. That's a really good thing about SPY. And some of these more liquid ETFs or stocks is that, you know, the spreads are tight. So it's going to be easier to get in and out of these trades. So yeah, that's that. I hope this kind of made a little bit more sense and you got a little bit clear understanding. Do understand I'm not a financial advisor, so use this for research or educational purposes only. Pause this video, rewind it, and go look at the notes that I put in this, and then go and do your own research, because I can't give you financial advice. Not a financial advisor, but the same idea applies to call credit spreads. It's just on the call side. So typically you sell a covered call when you have 100 shares. So the same kind of idea would work. It's just on the other side of the wheel. So yeah, that's this is why they say options are tricky and complicated. That's why it's definitely probably should start with single-legged options. Start with single-legged options if you can, right? So if you have an account size of $1,000, go look for stocks under $10 and sell some CSPs, also known as cash secured puts. Once you understand those, then you can do spreads. So that would be my advice. Once you understand the concepts of a cash secured put, a covered call, whatever that is, just selling those options, then you understand how much capital it takes to just enter that leg. And then it would make sense there after that to where you can offset that capital with buying insurance, right? Or buying a long option. A long option to offset the capital required. And another great thing about that is you can now trade a lot more stocks, ETFs. So you can participate in stocks that are $400. SPY's a good one. QQQ, IWM, DIA, XLK, and so on. I mean, there's so many other ones out there. Or you can do, Tesla, Microsoft, some of these more expensive stocks. You can trade them. Compared to if you didn't have the capital, you can't sell. I don't know what Tesla's at, but it's probably 16K ballpark for Tesla. Tesla, let's do a single option, and I'll just show you if you wanted to sell, obviously not today, if you wanted to sell like a couple weeks out, sell a bid, just sell one. Okay, so they don't show you your max risk here, but that's going to be 14,500. That's the capital you're going to have to come up with in order to sell the 145 put there. And kind of goes up from there. But yeah, I know this is a long video. I just wanted to go a little bit more in depth and kind of elaborate a little bit more. I hope this helped. Once again, do your own research, understand your risk, paper trade. I think Webull allowed papers. Webull and TD Ameritrade are two platforms. Yeah, so they allow paper trading. Come just paper trade if you don't want to. Or, execute some single-legged options. Because those are a little bit, easier to do, easier to understand. You can quickly understand your max risk and max reward with, single-legged options a little bit easier. Spreads, vertical spreads. That's like the next step of more advanced. So just make sure you master single-legged options first, and then you could quickly move up. But yeah, that's it for this video. Please like, subscribe down below. Any questions, leave them in the comments section below as well. And as always, hope you guys have a blessed weekend and take care out there.